everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Anthony Grisanti, contributor at CNBC and panelist on Futures Now. Always great to have you. Thanks for coming back.
Happy to be here.
Okay, so we want to talk about the oil markets, and recently now we see prices still hovering right around, high 90s, $100 a barrel. What do you make of what's going on? I know there's a lot of geopolitical concern right now. What about the supply side? How does that look?
Oh, the supply side, let's put it this way. In the Gulf right now, we have more crude oil than we've ever had in its history that we've been keeping records.
Really?
Over 200 million barrels are right now sitting in the Gulf. So basically what we've done is we've taken the oversupply in Cushing, Oklahoma, and because we reversed that pipeline a few months ago, we've moved it all down to the Gulf.
Right.
And it's still not being used.
We talked about that in the past. Right.
And now it's stuck there. So we've created a glut in that area rather than, in Cushing. So the supply side is excellent, and really crude oil would be trading about $90 a barrel right now. Today it finally dropped below 100 after a few days above it, and it really ramped up above 100 when the Russian-Ukrainian situation started to get ugly. And really that's what's holding it up. It's all geopolitical.
It sounds like the tail wagging the dog type of a story here. If that crude is now down in the Gulf where they wanted it to be as a result of that pipeline, where ostensibly it was supposed to be exported out, and it's sitting there, it's a tail wagging the dog story, isn't it? I mean, futures prices are high, but you have this supply glut.
Yeah, absolutely it is. And here's the reason why I think all that oil, and they keep reporting it, why, that it's down there and everything else. As you know, we have rules against exporting crude oil, but we can export product. I think the rule in crude oil changes within a year, year and a half, and
really?
You're going to see us start exporting crude oil.
So what about all this talk about energy independence? I mean, we have it, and we're selling it off.
We're going to give the baby away. Exactly. I've been talking about this with natural gas.
Right.
Because there's a huge push to start exporting natural gas. And I've said to myself, we haven't even tapped the potential in this country of what we could use natural gas for. So why would you give this baby away?
Exactly.
It's $4.50 here. It's $18 per BTU around the world. Where do you think prices are going to go?
And you and I spoke about this in the past, and we said as soon as they start expanding these export agreements, you're going to start to see the domestic price trend towards the world price.
Absolutely.
3 to 4 times higher, which seems crazy because we have such a competitive advantage with that cheap energy source, and all this talk about energy independence, you'd think they'd want to keep it that
why
way.
do you think manufacturing's starting to come back to this country?
Yeah.
Because we can do it cheaper, and it's because natural gas.
Energy costs.
And now we're going to give away that baby too.
So it sounds like, if you want, from an investor standpoint, you basically just want to be long. I mean,
you really do.
Not just these geopolitical factors notwithstanding, because maybe they'll be temporary, maybe the situation in Ukraine will calm down. But it seems like from a policy perspective, like what we're doing here, we're kind of laying the groundwork for higher prices with all these export agreements.
Yeah, we're shooting ourselves in the foot, number one. And number two is, right, you look at these natural gas producers around the country in the Balkans, that shale area, you want to start buying those. And the same thing with crude oil. The tankers is what I'm looking at.
Really?
Because I think you're going to see a lot more movement, especially of our crude oil overseas. So the tanker market, I'm looking at that right now.
Now the tanker market, and I know some of the shipping stocks have been very depressed over the last few years. So that kind of suggests they're a bargain now, right? Would you think?
Absolutely. There's not one or two that I could think of offhand, but the whole market as a whole has been depressed, has been undervalued, and I expect it to go higher.
Now, in the past, there's been some sort of a link between equity markets and oil, just on this kind of growth play or risk on, risk off type of mentality. Equity markets have been strong. Oil has been also strong. If we see stocks move to new highs, would that be the catalyst, you think, that could pop, other things aside, could that be a catalyst that pops crude, above the 100 mark?
Somewhat, but I don't see it the way it happened in 07 and 08. And I'll tell you why. Because number one, we had a much tighter crude oil supply at that point. And in 07, 08, before the crash happened, really the world economy was firing on all cylinders. We're still not firing on all cylinders at this point. Yeah, the equity market's going up, and that can be attributed one way or another, whether or not it's the stimulus program, whether or not it's just the hedge funds, because most small investors are out of these markets right now because of computerized trading, things like that. So I think that, yes, you will see it pop because they will move somewhat in tandem, but not like you saw.
Now, what about the banks? The banks under Dodd-Frank, a lot of them now are divesting of their commodity units. They were big players, the Wall Street banks. Has that activity been, quieting down?
Absolutely, it has. And in fact, when you look at the volumes of, say, even on the mercantile exchange, and crude oil and the products, natural gas, all down 20, 30, 40% in some cases from previous years.
Also, what's interesting, I think, is the growth in alternative energy, electric vehicles. I mean, you cannot, just about every new car now has some electric component to it, right?
Absolutely.
So, I mean, long term, that's, or maybe even now, that's starting to have an effect.
Well, it's funny, Mike, you mentioned that because we are hitting summer driving season, which is coming up right now. And historically, we would do, our requirements were about 9 million to 9.5 million barrels a day of gasoline to meet demand. And in the last 2 years, because of alternatives, because of the efficiency of the new cars coming on the road, that we haven't broke 8.8 million in the last 2 years. So we just don't see that demand anymore. So the spikes that you saw were gasoline, $4, $4.50, $5. You're only going to see that in little pockets or areas of the country that need specialized gas, such as California, Chicago. But as a whole, I don't think we're going to see $4 gas this year.
But at the same time, shouldn't we be focusing on emerging economies? I mean, you told me you took a trip to Southeast Asia. These are young, growing economies. Their demand is rising while ours is tapering off, right?
Right, absolutely. But I don't think that the rise in their demand is enough to offset how much less that, say, the industrial world, the Western world, is using right now.
Okay, so how do you play it for like the next year or two? Just basically from the long side?
Well, when you look at crude oil, I think you have to look at the geopolitical situation. I think right now that's kind of outweighing a lot of things in the market. And the other thing is, as we mentioned, the supply is so good. So I'm looking actually for rallies to sell in crude oil. Because I think the rest of this year, you could probably see $95 a barrel, and we're trading 100 right now. And I think in 15, as we get that much more efficient, you could actually see it trade off to $90 a barrel.
By the way, where is the WTI Brent spread right now?
Right now, it's about $7.50, $8. From moving in from $23 to a low of about $3.
It went to parity, didn't it?
Yeah, it did
for
a very short period of time. But I look at $3 as kind of the area where it really settled in.
And what's causing it to go back out now?
Well, I think the problems in in Russia and the Ukraine and things like that, it's going to affect Brent a little bit more than it affects us.
All right, great stuff, Anthony Grisanti. As always, thank you very much.
Thank you.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.